This ETF is going to make heads turn. It's called JEPQ, also known as the JP Morgan Nasdaq Equity Premium Income ETF, and it currently has a massive 15.89% dividend yield. You might have heard of the ETF JEPI. JEPQ is its Nasdaq 100 equivalent. The ETF's goal is to generate income by investing in stocks and collecting a dividend, as well as write call options against those stocks and collecting the premium. This ETF is aiming to get similar returns compared to the Nasdaq 100 index with less volatility. At the time of making this video, top holdings for JEPQ are Microsoft, Apple, Google, Amazon, Nvidia, and Meta, which makes sense because if you look at the Nasdaq 100, it is actually heavily favored towards tech stocks. You might also notice some strange holdings. Those holdings are JEPQ's options strategy. Let me explain. JEPQ uses ELNs, very similar to what JEPI does. In very basic terms, an ELN is when money is lent to a third party, and that third party invests in stocks, index, and options. The party receiving the money can guarantee that 100% of the money that it's getting is going to be paid back. This helps eliminate downside risk. Of course, this protection comes at a cost, so whatever profits are made are capped by something called the participation rate. For example, if an ELN has a participation rate of 50%, that means that the person that lends out the money only gets 50% of the profits. So there's far more to ELNs that I could fit in this one video. But you do need to know a few things about how they apply to JEPQ specifically, and we'll go over those later. An ETF with a 15.89% dividend yield has a cost. JEPQ has an expense ratio of 0.35%. Remember, JEPQ is actually a very new ETF, so the historical data is very limited. If you invested $10,000 when it first became available, you'd have $8,985.32 with an annual return of minus 14.52%. Now remember, 2022 was a down year for almost everything, including tech stocks. Here's how JEPQ compared to other very popular ETFs during the same time period. So compared to QQQ, an ETF that also tracks the Nasdaq 100, JEPQ performed very similarly. So from a dollars in, dollars out perspective, you were actually better off holding something like DEVO or SCHD over the time period. But remember that this ETF was actually created for income purposes, not necessarily growth. Let's go over some of the pros and cons. Of course, JEPQ is not a growth fund, which can limit profits. And obviously this ETF is very new and it has a limited history of price action and dividend history. You could easily lose money depending on market conditions. The fund uses ELNs, and of course the terms for that are not fully known. That can add risk. And of course, simply using the ELNs also limits growth. There's also counterparty risk with ELNs since you're loaning money to another entity, and ELNs are taxed as income, therefore not very tax efficient. JEPI also doesn't pay consistent dividends. But it's not all doom and gloom, there are some upsides to this ETF. Using ELNs and covered call strategies can actually limit the downside risk. This ETF is based on the Nasdaq 100, which is heavily tech-based, and I think most people would agree that tech is the future and only getting more valuable, which means that JEPQ could potentially increase in value just from that alone. It's also high yield, given that tech stocks can be volatile and increase options premiums, and one huge advantage that it doesn't make any promises for a specific monthly dividend, so it doesn't have to worry about returning capital, which can be detrimental to the fund long term. There's also less volatility compared to the Nasdaq 100 index, and it can be a good option for some income investors. So I think this fund is going to do okay in the long term, given that it's tech heavy. But before you start a position in JEPQ, we need to remember that JEPQ is an investment, and just like every investment, there is risk involved. You could lose your money. You should also consider using a financial advisor, because I personally am not one, and this is of course not financial advice, but you should talk to someone who knows about your specific wants, needs, and goals, and who can look at your financial position and help you make the best decisions. Use this video as a starting point. Remember, I'm just some guy on the internet that wants you to know a little bit more about what you're investing in. Does JEPQ have a place in your portfolio? Let me know in the comment section down below. Best of luck in your investing journey. If you found value in this video, go ahead and click a like, subscribe for more crypto, finance, and money content, and I'll see you in the next video. Take care.